Hello, and welcome to our presentation on Netflix's financial statements. Most of you are familiar with the multi-billion-dollar movie streaming service Netflix. It is the leading video streaming service in the world and has shaken up Hollywood with its own film production features, Netflix Originals. At a glance, Netflix is a relatively healthy company. Despite some short-term hiccups with liquidity of assets, Netflix is stable and is set up for success over the long run. When analyzing Netflix using net profit margin, a stable profitability ratio, one concludes that Netflix is a relatively healthy company based on profitability, as it is performing at just under the standard average for all industries at 0.1. With the ongoing pandemic, Netflix should see a gain and incumbent advantage as the market begins to shift in the short run over the next 2 quarters. It will be interesting to see how Netflix will capitalize on this opportunity and if they can use that advantage to increase revenue, profit, valuation, and clear up some short-term liabilities. Over the last 4 years, the revenue and gross profit for Netflix has steadily trended upward. The organization has witnessed increased revenue growth through expansion into film and production of original content, along with expansion of its subscription services internationally. The company's current ratio has fluctuated from 0.9 year-end in 2019 to 0.82 in quarter 2 2020. In comparison to the industry, Netflix's asset to liability ratio is a bit below the industry at a ratio of 1.8. Though their ability to liquefy assets isn't as strong as the industry, Netflix, according to its most recent quarterly letter to investors, has been able to weather the global pandemic as individuals have been sequestered in their homes and subscriptions has risen as a result. They have also been able to commit $150 million worldwide to support industry workers who have found themselves out of work. With regards to their debt to equity ratio, the organization has been able to decrease its ratio from 1.95 in 2019 to a current ratio of 1.69. Still far higher than industry trends at 0.45. The lack of production sets may be contributing to this downward trend, and although it is higher than the widely accepted 1-to-1 ratio to keep debt at a level that is less than the investment level of the owners of the business, Netflix is a strong and viable company valued at $219 billion. As seen in the analysis, Netflix has maintained an upward trend in recent years, and there are multiple reasons for this. Firstly, its platform is user-friendly and provides high-quality service to its members. As such, they continue to make pleasing customers a priority. Netflix maintains that it offers a comfortable escape from reality. The offering of quality and diverse content has created a growth in engagement among members, which has driven word-of-mouth marketing, improved retention, and has increased paid membership. Popular shows that were trending at the beginning of the year, such as Tiger King and Love is Blind, also contributed to the company's upward trend. There was an increase of 20% in content investment, as well as 50% of cash spend was dedicated to original content. Lastly, COVID-19 has had a significant effect on the current health of the company. Throughout the pandemic, Netflix has seen a temporary accelerated membership growth due to home confinement. In addition, the international revenue will be less than previously forecasted due to the US dollar rising sharply. Due to the production shutdown, some cash spending on content has been delayed, improving free cash flow. In our analysis, we identified 6 main stakeholders in Netflix's ecosystem: investors, the general public, media, suppliers, internal stakeholders, as well as regulators. For the investor community, they have seen a surge in stock prices, and those prices are at an all-time high. The outlook for their investment appears to have strong future growth potential, including international outlook for demand. Internal stakeholders are the employees of Netflix. Although their base of employees had some challenging times at the start of COVID due to working from home, most of the connectivity issues are now resolved. Many of these issues carried over to the support of the subscribers. The number one issue for Netflix is to ensure safety for their employees and other internal stakeholders alike. You should know, Netflix employees give their company an overall rating of 87% happy employees. Happy employees equal more productive employees. And finally, the regulators. Netflix is constantly refreshing their content to ensure best choices and recommendations are available for their subscribers. Generally, Netflix's stakeholders and the entire ecosystem have a positive outlook on future growth. Their financial numbers are suggestive of strength and profitability in the industry. Thank you for viewing our presentation.